Hey, good evening, everyone. This is Mark from Rightline. We're going to be starting in about 60 seconds. There's a lot of traders still coming into the room. So just in 1 minute, we're going to start. Okay, good. Hey, good evening, everyone. Um, Thanks so much for coming. I hope everybody can hear me okay. And we have a huge turnout. And I spent an enormous amount of time on the slides and found out that this was a much more complex topic than I first thought. And we're really going to get into it. The oscillator is really an amazing tool that's undergone a significant amount of evolution since it was first developed. And we're going to get into all of that. Understanding how to trade it is really not that simple. It's not as straightforward as a MACD or even a volume ladder. So let's just begin. Now I have to start with this disclaimer that all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Rightline takes no responsibility for any participation by visitors or subscribers when there are futures, forex, or stock markets, nor for any profits or losses may be incurred. I mean, everybody understands that trading the markets, futures, forex, and stocks involves substantial risk. And it should be understood that a person can lose a lot of money, therefore the participation in these markets is not appropriate for everyone. So be very careful when you trade. Never risk more than 2% of your account on any trade. Do a significant amount of your own due diligence. We recommend you consult a financial advisor. And it's just important to note that Rightline is not a registered financial advisor and not a licensed commodities trading advisor. So with that said, let's move forward and talk about the man who first created the oscillator. Now, his name was George Lane. Now, I'm going to answer all the questions at the end, and I'm going to try to stop at around about 6:45 to 6:50 because there's always been a huge amount of questions, and there probably will be questions here. Now, George Lane created this indicator, and what he believed at the time, and I believe that his understanding of the indicator he created was accurate at the time that he developed it. Now, he believed that momentum or speed of the price up, and he called it a stock exchange, but it's simply a market, changed before price itself changed. In other words, the stochastic oscillator, and he developed stochastic, and then later on, there was RSI, there was fast stochastic, there were the whole basket of oscillators, but he was the one who formulated the core indicator, stochastic. He believed that it was a leading indicator, and based on his observation of divergence, believed that the change in momentum of price presaged or heralded a change in price itself. So you could trade bullish or bearish divergence with a significant amount of specificity, and it was a very, very reliable indicator. And he believed that this signal is the first and the most important trading signal identified in the change of a trend. Now, he developed this indicator 25 years ago, and it's impossible to assess what he saw back then, but I tend to believe that what he saw was accurate. And we'll talk for a minute about why back then trading divergent signals was really such an accurate signal, and why trading divergent signals now fail so often. Now, let's just talk about how every oscillator, no matter how the formula is modified, except for the Legere to some extent, is calculated using a variation of the following formula. Now, this is just the stochastic oscillator, but if you understand this formula, you'll understand how all oscillators work. Now, C is the most recent closing price, and it's compared to the low of the 14 previous trading sessions. So what you really develop, what the oscillator develops, or stochastic develops, is a 14-period moving average of the lows. And then it creates a 14-period, moving average of the highs. And the percent K line, which is the key line, is the current market rate for the market or momentum. And the percent K is the 3-period moving average. Percent D is the 3-period moving average of percent K. Now, percent K is calculated from these three. It's right up here. It's 100 in parentheses, the most recent closing price minus the moving average of the last 14-period lows over the moving average of the last 14-period lows minus highs minus the moving average of the last 14-period lows. So all it's essentially doing is it's looking at the relationship between the close of a candle and the high of a candle in an uptrend, and the close of a candle and the low of a candle in a downtrend. And as the close of the candle approaches that 14-period low, momentum is moving to the downside. And as the close of the candle approaches that 14-period moving average of the high, then you have momentum moving to the upside. And that's how the percent K is calculated. And again, percent D is just a slower percent K. It's just a 3-period moving average of percent K. So the key line is percent K, and percent D is just a derivative of percent K. I hope that's clear. And the only takeaway message from all of this is that it's placed on a 14 period, that you can make it faster if you decrease that 14 to say 10 or 9 or 8. You can make it slower if you take that moving average and move it to, like, say 16, 17, 18, or 21. 14 is the standard input. And it's simply the relationship between the close and the high of a long move and the close and the low of a short move. That determines how percent K traces. Now, in order for the oscillator to work, whatever kind of bar that you're trading must have wicks. Remember, the open, close, and high and low and volume are the only 5 metrics that appear on a chart. Volume can be displayed in many, many elegant ways now. The volume ladder, market delta, market profile. but they are all based on volume, and they are all at volume analyses. So the only 5 metrics on any trading chart is the open, high, low, close, and volume. There's nothing else. There's no magic data that's going to talk to you about bank opens and bank closes and this and that, because those 5 metrics are all you got, and it's all you're ever going to have on the market. Now let's just take a look, and this is just a recent chart of crude, at divergence. And here's where divergence works. Now price makes a higher high, but here's the percent K line of stochastic. It's just making a lower high, and you can see it heralds a collapse in price. Now again, I believe when George Lane created this indicator, this was a very, very common event, and that divergence really worked for him, because I looked at all the stuff that he did in the markets, and he's really a smart guy. He wouldn't go out on a limb and make that statement. And this wasn't the only indicator that he created, or the only comments or mathematical derivations he made off the market. He was a very, very brilliant guy. Unfortunately, it just doesn't happen anymore. And it just doesn't happen with enough regularity to trade it. And if I look further, I could find, even more stunning divergence failures. But here you have stochastic making a significantly lower high, price making a higher high. And if you went short, you would come down a little bit, but then the market just trended all the way back up. I mean, this is a divergence failure. And you're going to have this more and more commonly as we move out into the future. It's going to be impossible to trade divergence. And what I would do, if divergence is part of your trading methodology, or you're considering looking at it, or it's something that you want to examine into the future, I just would forget about it. And I'm going to tell you exactly the reason why divergence fails to a significant degree now, and why it's going to fail to a greater and greater extent as we move out into the future. And in fact, I think I'm going to tell you right now. Well, I'm going to tell you in a second. Now, I pulled this chart off the internet. It's not mine. I got it from TradingView. And here's how the oscillator is supposed to work. And this is stochastic. It's a stochastic RSI. And stochastic RSI simply applies the stochastic transformation twice. I mean, it looks at the stochastic and then reuses that same stochastic formula over again. And you simply, when the market's oversold and moves up, you buy along, and up it goes. When the market's overbought and you get a cross down from the 80 line, you sell. When the market comes down from overbought, crosses the 80 line, you sell. And when the market comes up from oversold and crosses the 20 line, you buy. And you can see it looks really nice. And if I wanted you to trade the oscillator, this would be a chart that I would show you. But I took this from the same set of slides from TradingView. And overbought doesn't always mean overbought. And here is the same thing. The oscillator continues to flash overbought, 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 and price continues to go higher and higher and higher. So this tells you that you have to be very, very careful when you trade an oscillator, and you have to understand exactly what's going on in the market now if you want to trade it profitably. And I think I'm going to tell you my theory, and I think I typed it out here. Back when oscillators were first developed, there was little institutional volume in the market. And this really goes right to the heart of why Japanese candlestick formations are now so much weaker. I mean, when I traded them 15 years ago, they were very powerful. But institutional volume or money is now becoming the dominant force present in the market. And as we move into the future, it's going to become a stronger and stronger component of the market. Now, back when George Lane developed this indicator, there was little institutional money. So the power of each buyer was approximately equal to the power of each seller. Given that, when so much money was expended to take any financial instrument up to overbought, and you got a divergent signal, it was likely that the signal was going to work. But this is no longer true because institutional volume now dominates and it determines the direction of price. And when you see a financial instrument, whether it be a stock, a future, or a Forex pair, heading up and moving to overbought, all it's doing now is becoming a proxy or a footprint of institutional money. So in the era of institutional volume, how should you trade this indicator? And these are actually my 5 little trading rules that I developed. And one, there's no such thing as overbought or oversold anymore. This is now a fallacy. Overbought or oversold as a metric determined by the oscillator simply no longer exists. The market will continue to rise as long as institutional money continues to buy the instrument. And the market's only going to reverse, not when the oscillator shows a diminution in momentum. It's going to reverse when the institutional traders pull their money away. And it's not going to stop going down for the same reason. Now, there's still some mathematical principles that hold. And what happens if institutional traders push the oscillator push price all the way up? So the oscillator goes into overbought, or stochastic goes into overbought and sticks. And then they pull their money away. They don't actually start selling the instrument. They just step aside. Why is that instrument likely to fall? And the answer is still that the principle of reversion to the mean is still operational. When any financial instrument is pulled very, very far from the mean, and then all of a sudden the force that pushed it that far steps aside, it's going to want to come back to the mean. The problem is predicting when that's going to occur, I believe, is impossible. Unless you know when the institutional traders are going to stop buying or stop selling, the only thing you can do is continue to trade in their direction. Any trader that tries to call a top or tries to call a bottom, and I know there are tons of people out there that tell you when the market's likely to reverse, when the market's likely to reverse. I'm telling you from 15 years of experience, you'll never be able to call a bottom or a top with enough precision to make money off of it. Because bottoms and tops now are created by institutional money. And markets reverse direction at the whim of institutional money only. Now, this was not the case 15 years ago. 15 years ago, it was traders like you and I putting in small lots that simply just decided that we would take an instrument overbought, but that principle of reversion to the mean was much more powerful. And on a decrease in momentum, a divergent signal was much more powerful. So reversion to the mean still applies, but the concept has been skewed by institutional money. I mean, this is now the market of institutional money. Your trading paradigm and your trading methodology has to now take into account the fact that 80% of price movement is created by the institutions, and that 20% of the time or most of the time when institutional money is not at work, the market's chop. So almost all really good trends are based on the application of institutional money. That's why trading divergence is tantamount now to trading against money flow or institutional money. And the only thing you can do is trade in the direction of money flow or institutional money. Now, the oscillator or stochastic is a halfway decent proxy for looking at the footstep of big money, but it was never meant to be. George Lane created it in order to use its divergence signal to counter trend trade the market. He never created it to create a long move in the trend or a short move in the trend. I read all the material that he published on the oscillator, on his stochastic oscillator, and all he talked about was trading divergent signals. He never once talks about trading in the direction of the trend. This was a guy who tried to make an indicator that led price, believed that momentum did, and was looking only to fade the market. That's what he created that tool for. And, for the risk of being redundant, the reason the forces that were at work at the time he created it are simply not present anymore. So which indicator most accurately assesses buying and selling pressure, completely ignoring any potential divergence signals? Remember, we don't care about them anymore. And if we do, we're going to lose a significant amount of money. You are going to catch some major reversals because the divergence signal works sometimes. And when you do, you get in right at the beginning of the trend. And you can ride it a long way, but you're going to get beaten up a lot. Because when I went through these slides, when I went through the markets, there were so many failed divergence signals. It was almost a joke. You cannot trade divergence. And what you have to do is use the stochastic or an oscillator variation to follow the footprint of big money. This is how I believe the oscillator can be used as a powerful tool to help you with your trading. And to do anything else with it is going to wind up being a big mistake. Now, this is the Legere. And I showed you the formula for stochastic, and I wanted to show you the formula for the Legere. It's very different than all the other oscillator formulas. It has a gamma, which to a great extent determines its speed, and then it also has multiple filters. And those filters determine how smoothly it moves. Now, this is the easy language code for a Legere. And it's not important to understand it, just to know that it has a tremendous amount of modifiability, and it has the flexibility that no other oscillator does. So let's take a look at a few signals. Now, I just wanted to show you the modified Legere because I believe it's the best way to trade, and I just wanted to show it to you first. Now, in order to trade anything, we have to create a little bit of market structure. Here's a 50, and here's a 15. I mean, those are the key moving averages that we use. And the only rule that we're going to use here to trade, again, based on institutional money, is when price is below the 50, we go short because we're going to trade the trend. When price is above the 50, we're always going to go long. We are never going to take a counter trend signal, and every oscillator, including the Legere, are going to give you counter trend trades, which you're never going to take. Remember how we modified the oscillator as a tool. The tool is to get us into a trade in the direction of institutional money. Institutional money creates the trend, and when we're in a downtrend, we're only going to use down signals when price is below the 50 and the 15. That's it. So we're creating a special filter acknowledging the fact that it's institutional money that creates or really governs the movement of price. And you see that on our tool, we created this down arrow. Now this comes on the chart, it flickers intra-candle, and it prints when the Legere line crosses below the 80 line. Now this yellow line, I pretty much ignore. It's inherent in the formula, and it's called fractal energy, and it's supposed to give you an assessment of how far the move is going to go. I mean, it is a volatility assessment, but I've not found it to be useful. I don't make it transparent because it doesn't bother me. But this is not the Legere line crossing across a signal line. The yellow line, which can be made invisible, is really irrelevant to the trade. What's important is this cyan, I think that's cyan, crossing below the 80 line, you get this signal. So you're going to go short. And then eventually what happens to the Legere? It locks short. Now, back in the day, traders would wait for that locked short signal to look to fade the market long. We're not going to do that. When we get this solid bar of red right here, we know that here the Legere crossed the 80 line to get us into the trade. And we don't have it locked down, so the bar is yellow. But then as soon as the Legere locks short as a proxy for the flow of institutional money, we know that price is going to continue to fall. And this counter trend candle here are traders taking oscillator divergence, MACD divergence, trading against the flow of institutional money. But because we created a very smooth Legere, it doesn't even create a blip in the line. This line stays locked down and this stays red. So you can take this trade all the way short, all the way down. I'm not looking to see how far it moves. This is only trading methodology. Now, every time we get a long signal below the 50, we're going to ignore it. Because back in the day, maybe you would take a counter trend trade. We don't do that anymore because the way institutional money has changed the market. Here's our next short signal. Now, this is a little bit riskier because the 15 is not quite across the 50, and this is not quite broken the 50, but it's a short signal. Then we lock down red here where the Legere locks down, and we go short. A great place to exit is on the up arrow. When the Legere crosses the oversold line or the 20 line, back up. Back in the day, traders would anticipate a long move. We're not going to do that. And you see you get two potential long moves right here, which are counter trend. I didn't pull them off the chart or erase them. I want you to see that counter trend signals are almost always going to fail, and that all you can do is trade in the direction of the trend. You just need the most precise tool to get you short and keep you short in the appropriate direction. Now let's take a look at the Legere and Stochastic. And Stochastic is pretty popular. A lot of traders who look at the oscillator trade it. And I want to show you the superiority of the Legere. And this is going to happen over and over again. Now the oscillator is going to give you the signal right here where this gold line crosses below the signal line and down across the 80 line. It gives you the short signal here, 2 candles before the Legere. The Legere intra-candle is going to flash this down candle, this down arrow, and it's going to get you in. Now here's the difference. On this single up candle, nothing happens. But on this dual up candle, the oscillator, the stochastic oscillator, takes you out of the trade. It crosses above the 20 line, telling you that there's a potential for a reversal in the market. But the Legere line stays below the 20 line, And if you look at this red line, it stays locked down. So you can take this trade all the way down. And it's when you get this green arrow that you're going to exit the trade. So while the stochastic gets you in a couple of candles early, it's going to bounce you right out and blow you away from a terrific continuation trade to the downside. Now, the other additional thing is that optimally, you want to take a short on a cross down of the 80 line and the Legere line. But if the market is locked down, now 15 years ago, you would never take this trade. But today, this is honestly almost a bread and butter trade. This is telling us that institutional money is plowing the market to the downside. Let's say you missed this arrow. Let's say you were answering the phone or you had to use the bathroom. Happens to all of us. The signal comes, we weren't here. Well, on a 2-candle pull-up, you can still enter this trade short. You don't need this because you've still got a locked short market and you still get a great move. And it's not that you're taking the trade where the trade has evolved a significant period of time. You're still early in the move. Now, what makes taking a trade right here so advantageous is that you've got these two sets of buyers in these 2 candles who have taken counter trend positions. So when the move continues down, which is almost always going to do, now obviously not 100% of the time, we would never have a loser, but it does the vast majority of the time. I'd say well over 80% of the time, we're going to run these traders over. So they give us a great opportunity so that the market is pushed down by an additional force, not just the addition of institutional money selling the market and selling contracts or selling shares of stock or selling lots in the Forex. We get to stop out all these long traders. We've got actually 3 caught here, and we're going to blow them right out of the market. Now, here is RSI. Now, RSI has really sort of become in vogue, I think. I see a lot of people touting it. A lot of people use it as a forward-looking tool to determine how the S&P is going to move out into the future. I've seen traders, they create multiple lines here in the RSI to tell you, to give you an idea of where price is going to move out into the future. And listen, I looked at the formula, and the RSI formula is a lot more elegant than that of stochastic. Like I said, the RSI is really a dual stochastic formula. And you can see it moves quite differently than stochastic does. I don't have a stochastic up here, but it really does. But at least I personally have found it impossible to trade, at least to use as a day trading or swing trading tool. Remember, it's primarily a divergence tool. That's why it was created. And this is just a variation of stochastic, which was created by George Lane. It is not a trend following tool, and it's really best exemplified by stochastic. Now here you get price making a clear higher high and stochastic making a lower high. Perfect divergence here. Here, it's a crashing failure. But if you look at the Legere here on this entry candle is locked long. That's that green line. And remember, we have already said we are going to ignore any type of divergent signal. And the only thing we're going to use any oscillator we choose to trade as simply a proxy of tracing the direction of institutional money and trade the trend. Now you can see here that the 50's up, the 15's up, and this actually gives you a long entry. Now you don't have a long arrow here, but on a retracement into a lock long Legere, you can take this trade long and you get a nice winner. It's not a home run trade, but it could potentially have been a home run. The key is RSI gave us failed divergence. We ignored it. We looked at the direction of money flow, which is green on this candle, and up the market goes. Now, we don't take this counter trend signal. We're going to get them. I'm not removing them from the chart because we're going to look at a live chart and you're going to see them. You're just going to ignore it. You know, la-di-da. Sometimes this is going to give you an incredible reversal. This is not a reversal you would take. It's right into the 50. You're not going to trade into support. But if you're a mile above the 50, sometimes the Legere will signal you into a great trade. But you know, any signal that sometimes works is the kind of signal that bankrupts you. So what our mandate is as day traders or swing traders is not to get winners, it's to avoid losers. You know, and I had 2 rugged days in the market on Thursday and Friday. I got tons of winners. The problem is I took marginal trades and didn't avoid losers. And if you look at this arrow, here is the cross of the Legere above the 80 line. I'm sorry, above the 20 line. And it's a perfect long trade. Now, the Legere doesn't lock long till all the way here. But that's okay. The direction of momentum is to the upside. We took the entry early, right on the Legere crossing above the 20 line, and we got a great long. The RSI really didn't give us much of anything. Now, it never went to overbought, it never went to oversold. And I read a lot about trading RSI. And it will go to overbought and it will go to oversold. And there's all kinds of elegant ways of trading it. But personally, I don't get them. And I really did try to work out a way to trade it, and I just couldn't figure it out. I only want to trade in the direction of institutional money and in the direction of the trend. And I want a tool that's going to give me a precise long entry when I want to go long, and a precise short entry when I want to go short. And when it gives me a counter trend signal, I just want to stand down. And you can see how bad divergence works. And I really, really would urge anyone who's trying to trade it again or looking into trading it to just let it go. It is not going to be of any benefit. And remember, since George Lane created this, and he did it about 20 years ago, it's never made anybody rich, and it's never made anybody money. And my mentor, his name is Alexander Elder, and I think he's retired now because I've tried to email him a few times and I haven't got a response. And normally he responds to me really, really quickly. And he sent me a signed copy of his book. You know, he developed the triple screen method where you want a multi-time frame alignment of any indicator entry that you take. I mean, I think he really created the core of modern trading well before institutional money was a major factor in trading. He put very, very little stock in divergent signals. And he spent a lot of money. This is an analog signal. If you look at the code, it's a little bit different. It's a very complicated signal to create that signals potential divergence. And if you try to chase an indicator that will do that, it's just gonna cause you to lose money. He did that because 15 years ago or 20 years ago, it was still a valid entry. And he has an indicator that does it. And I was trying to call him and contact him to see if I could get a copy of it. But I think he's just, you know, out of the business right now. I mean, he would be well into his 80s at this point. Now, this is Williams K. Now, a lot of people just think that Williams K is the shits. Excuse my language. You know, and the guy who developed it, again, is another really smart guy. I looked at the formula. It's a much more complex derivation than stochastic. I'm not going to put it up because it's really irrelevant. Because believe me, I don't think you're going to want to trade it. Now, I didn't cherry pick this. You're going to see this happen all the time. And I have to give you examples on slides in this particular case of what I believe is going to happen in a lot of instances. Now, if you look at the Williams indicator, it crosses above the 20 line. And I think Williams is the 30 line right here. And it's going to get you in earlier. And there's the Legere. Well, look at what happens as the trade evolves. Just like stochastic, it's too sensitive. It drops below and takes you out. It drops below and takes you out. And so it's too sensitive an indicator. It gets jockeyed around too easily by price. It's going to cost you a lot. I mean, one single down close on price can blow you out of a trade that's going to go another 20 or 30 ticks. But look at the Legere. This is we created it to be smooth. It's locked long because price, it is affected, but not enough to drop below the the 80 line. So we still get that locked green. And then there's the reversal candle. That signals you out of the trade. And this is a great signal to leave. When the Legere finally crosses below the 80 line, it can come back up. But if it comes back up, you can take it long again. This is a great exit. And you can see you get the majority of the move. And the only thing that the Williams R did was get you in earlier, but jockey you out of the trade a lot faster. And I looked at a lot of divergence signals off the Williams indicator. Again, I saw multiple failures. And I almost was going to call this. This is an equal high, and this is a higher high. This could almost be taken as a divergence signal here when you get equal highs. And you can see if you counter trend traded the market here, you would go nowhere. I wanted to give you examples where the stochastic indicator may clear cut lower highs, but an equal high on higher price can also create a divergent signal. Now, the remarkable thing about this indicator is it's bounded. And what I did a few years ago is I unbounded it. So I had an oscillator that just kept going up forever until we got a signal, and then it started coming back down. And I looked and saw how an unbounded indicator worked against a bounded indicator. And I really like the bounded indicator better. It's the only indicator that I've ever seen that actually creates an upper and lower bound. And when it gets to that upper bound and just sticks there, it's a great proxy for a long move and a long continuation. Now let me go over to the markets. I'm going to take you out of the slides. And let's look at a real market. And what I did here was I added an indicator. This is our actual money flow indicator. And I wanted to show you how accurately the Legere matched our money flow indicator. Now remember that the Legere, and I want to be completely upfront with all of you, everyone that's in the room. I don't think, and I can proffer it to you as a standalone trading tool, it is not. It's a great additional confirmation that price is going to continue long or price is going to continue short. As really good as it is, I don't think it's quite enough to simply trade as a standalone. Now, sometimes it gets you into trades that are just remarkable. And if I show you here, on this global crosshair, this long trade right here is before our institutional money flow indicator went green. The Legere came up and crossed the 20 line, gave you a long signal, and up you go. So it sometimes will give you a better signal, but as confirmation in terms of the direction of money flow, it's terrific. And if you look here, it gives you another successful long. Now here, this is not a successful long. And like I said, I don't want to proffer it to you as a standalone tool, but it will give you some terrific entries. Now, we don't trade a counter trend. And here's a great short signal right here without any confirmation of money flow. That's a counter trend trade. And remember I said, sometimes it's going to give you a killer long. There's your killer long. Now, any of the other oscillators will not do this for you. They really fail. I showed you RSI, I showed you Stochastic, and I showed you Williams R, Williams K. I can't remember which one I put in there. They are not going to give you these entries. And here's your perfect entry short. Before our money flow indicator signals, you're short. Now, all these counter trend signals, you're just not going to take. Remember, our goal is not to get a lot of winners. It's to avoid taking a loser. And as a tool that censors out losers, it's a fabulous tool. You don't trade in the direction of the Legere. You try to counter trend trade its signals. It's going to cost you. So now here's a long trade. Here's a short signal. But you got to have a huge stop to stay in this trade. And you have no reentry. Like I said, it's not a perfect standalone entry tool, but you can see right here, there's your long, there's your long, and it gives you really good entries. And here, you see the Legere is locked long right here. When price comes back to here, this is an entry where you can take the continuation. You can take any continuation trade on a locked long Legere. And what we did was we created a lot of additional components to it to make it easier to interpret. When it's locked long, this line goes green. When it crosses the 20 line or the 80 line, that's when you get the arrows. So it's very reliable in predicting the direction of the trend. I mean, here's your short right here. Here's your long right here. Here's your long right here. Here's your long right here. And I can go on and on and on. So I hope I gave you a little bit of a feel. I mean, we have about 10 minutes left to go. It's a great entry refinement tool. If you're not sure, you have tons of gray zone trades, and if you want to be able to trade with more certainty and more confidence, it's a great tool to add. When we've done a lot of work on it, it's the only oscillator bar that has a bar on it that tells you when it's locked long and locked short. And we've smoothed it to keep you in a trade. And you can see how accurate. Now this is just a signal on this little blip here. So you got an up arrow on a down candle. And that's going to happen once in a blue moon. Here's really your entry. And it's a perfect entry. And you get these over and over. If you have something to confirm the entry, you're going to get stellar trades. not as a standalone, but as an additional affirmation that you're taking a great trade. Now, there are going to be a lot of trades where the direction of the Legere doesn't agree with your entry, where momentum on the Legere hasn't turned. And I'm telling you, if you take those trades, you're going to wind up in trouble. And I'll just show you this really quickly. Here's the Legere and every oscillator together. Here's RSI, here's Stochastic, here's Williams R. And if you compare all of these together, you're going to see that by far and away, I just don't have time to do it. What I try to do is pull entries out of these and show them to you. The best signals that you're going to get are going to be on the Legere. And here's the Legere lock short right here. And you can see price, even though you get these bumps and this bump, this is the only direction that you can trade. Now on this trade, the Williams R took you out of the trade twice. Here, you got bumped out of the trade once, but this is not just bumped out. If you traded this, you would go long. If you traded this, you would go long. If you traded the RSI, you would go long. The modified Legere tells you you can only trade short. It's locked down. And all you're looking for is an optimal short entry. And the short entry comes right here. When the 50 crosses the 50 and the 50 is red, and you would be in here. Safe and sound. So I hope that sort of summed it up for you. And I think this slide really, or this chart really tells the tale. You're going to get bumped out and given counter trend trade signals on any other type of stochastic oscillator or oscillator. The Legere will never do that for you. It's a very smooth tool, and yet it still has a lot of speed. It's pretty rare when you can do that. Now let me just put the slides up. I'll show you our offer. Now I hope you learned something from this, because that's really my goal, was just to give you something that you could. Well, this chart's giving me a headache here. Sometimes that happens. Well, I'm not going to worry about it now. Let me bring the slides over one more time, and I'm not even going to blow them up for you. Just going to show you our offer, and then I'll answer any questions that you have. Now, a lot of this material may be new to a lot of traders, but I hope it shows you a way to increase the precision of your entries, and it also gives you a lot of information about how not to trade and how not to use it. And remember that we have to trade. We're trading in an era of institutional money that's only going to get more and more powerful. Institutional money, I think, eventually is going to dominate the direction of the market. Nothing is going to, there's going to be very, very little time when we as small commercial traders are going to have any say in the direction of the market. And all the indicators we use must track the direction of institutional money, or we're going to really, really get beaten up. That's got to be our goal, which was not our goal 15 to 20 years ago. Now here's our website at www.rightlinetrading.com. Email at info@rightlinetrading.com. And our phone is 786-713-5276. This is being recorded, and I'm going to answer all your questions. And here's our offer. It's the Legere. It is normally $6.99. We're putting it up on the website. It's brand new, and we're going to give it to you for $2.99. It's a lifetime license. We're looking on a major upgrade and update on it. And any updates or upgrades you're going to get, you're going to come into the live trading room with me for a month, and the first 5 orders will get hybrid Unirenko bars. Now, I didn't go into what hybrid Unarenko bars are, but they're very, very, very helpful. And I'm going to show them to you right now. I'm not going to get into it, but I want to show you what these hybrid Unarenko bars do. Now, you can only see them on the right edge. Here's the NASDAQ. Now, this is the only thing that allows us to trade. Remember I said you need a wick in order to trade an oscillator? Well, standard Unarenko and Renko have no wick. So what we did was we created hybrid Unarenko. Now, we didn't invent it, because there were traders in our room who told us that they had seen it on other websites at other times, years ago, whatever. But what we see is we look into the candle and we see the wicks. And the wicks allow the really give you precise calculations of the Legere. And it also helps you trade, because if you're looking for a pullback, you can see that pullback inside the candle body. Remember that Renko and Unarenko hide a lot of price movement. We don't want that to happen. We want to see where price is all the time. Now, the only problem with it is that NinjaTrader won't hold those wicks. There's no coding in here in the platform itself. So when you close it and reopen it, the wicks will disappear. Now, nothing on this platform ever repaints or ever changes. But the wicks will not be held if you close and open the platform. That's a problem with Ninja. We don't look to remove them. You see, as you look back on price on the NQ, you just do not get the wicks. But as you're trading them, they are never going to disappear or change or get modified. So let me see if there are any questions. Let me move the NQ over here. Hang on one second. I'm concerned that this is locked up here. Oh, there it goes. I got it to move. Let me move it over to here. Excuse me one sec, and then I'll answer any questions. Let me just move this down and over. Let me move this down and over. These are all of the different oscillators. And let me answer any questions that you have. Okay, hang on. Okay. I'm just going to bring the window over, and I'll read the question. Okay. Ted, I'm all a Twitter. Is that a fourth form of oscillation? It's, the Legere form is really formula. I never really paid much attention to it until I started doing my homework on oscillator formulas. And then I saw that oscillator gives you the flexibility that none of the others do. The only flexibility you have on the other oscillator is to change the internal moving averages, or the look back period of the average high or the average low. No matter how you swing it, that's the only thing you can modify. This with RSI, with Williams K, Williams R. This does not. This has multiple transformations inside it that act as filters, so that a 1 or 2 candle blip can be filtered. So it gives you really, really nice ways. If you want to trade it with a lot of speed, I don't think it's going to work for you. You want to trade a lot of speed, just trade stochastic. It'll get you into a trade a candle early and get you right out of the trade 3 candles later. Hey, Mike, good to be with you too. Just send us an email. Sergio's on vacation for 3 days. Rory will send it to you. Hey, Charles. Thank you much. Thank you. Okay, Kathy, I'm glad you got it. Yes, there will be a replay, Derek. Okay. Wayne said this guy. These are all SMAs. You can change them to EMAs if you want, Mike, but we haven't found that change inside the Legere or inside the stochastic oscillator is really helpful. But those are all, that's a great, and that is, by the way, is a great question. Those are 14 period SMAs. The solid red block, Frank, is where the indicator is locked short or locked long. See this line here? And look at the Legere here. Now let me show you the chart where you just have the Legere. It's telling you institutional money. Here it's locked green. The upper line is the Legere. And when that line is green, it tells you money is pushing to the upside. Now you finally get pushed out of the trade and you get a down signal because you get 4 candles back, and that jockeys you out of the trade. But that's what that means. And you can take a retracement and entry on this green bar at any point in the day. And I'll show you a good one. Let's say, like right here is your entry. Good entry. And you are going to have to endure one reversal candle. But see this wick that pulls back? You need a retracement. But then there's your entry. The Legere is locked green, and up you go. So it's it's a very helpful trade continuation signal. Stay in the Legere actually is the lower line. I'm sorry. Okay, it just unlocked. It's actually this line. And you know what? I'm going to take the other indicator out. I just wanted to show you that a direct money flow indicator and the Legere are very consistent. And now we just have the Legere. You can see that once it locks long, all you're looking for is an entry. And there's your entry on the pullback. And there's the continuation. When it locks short, here, you're just looking for a pullback and continuation short. And you have a very, very low risk, high probability win. And here's your terrific trade right at the inception. Right here. 15's above the 50, 15's green, 50's green, and up you go for a terrific move. Legere calls great trades, and it censors bad ones. And once this locks long, any retracement can be taken long again. Mike, this is Unirenko, not Renko. And I've just found that as long as you look at the internal wicks inside, I don't have the indicator, I don't have the model, I don't have the hybrid system in here. So you can't see the internal wicks. But I just think it creates much smoother price movement. And let me tell you, Mike, I traded range bars forever, but just the way the market moves now, and I can show you the range, I just find the range to be far more difficult to trade. And let me tell you, I was just a big range proponent. Now you can trade the Legere on any time frame and here's just price action. It's much choppier. Now this is an 8 range. It's fast on crude, but it's just much more difficult to trade. And this Legere is not optimized for Unirenko. It's just optimized. I mean, you're going to get a lot of chop on any oscillator that you use. It's much more difficult to trade. I mean, if you look at crude, it's a bear to trade. And I used to love to trade range, but the way the market moves now, I don't think anything gives you the kind of entries that Unorenco does. And as long as you can see the internal wicks, you've got yourself a really, really good trade entry system. So I think that's the most important thing. Now, when you trade Unorenco, you really have to be careful about not taking a bad trade, because you're obliterating a lot of static. But with the wicks, you can interpret Japanese candlestick patterns. It really gives you a lot of configurability. And you see, here's the wicks right here on the move. You can see right inside the candle. It's transparent. So I've just become a Unorenco, an ardent supporter of it. No, Charles, you can use it on any chart you like. I mean, the oscillator is not configured for Unorenco. If you want to use it on minutes, you can. You can use it on anything. It does not matter. It has not been optimized for Unorenco. It will give you entry signals on any time frame and on any type of chart. Okay, you use it at 30. I think our Legere is 14. Nope, same as you, Charles. Same as you, Mike. 13. And internally it's set at 1. So we use the same settings that you do, Mike. Oh, he was a psychiatrist. That's really interesting, Jim. Thanks for that. Let's see if we can get a stock. Let me see. Hold on a second. I'm going to quickly attach. I'm going to connect my kinetic feed. I'm going to look at the QQQ. Okay, that was easy enough. I don't have the QQQ in my instrument manager. Hang on one second. Let me add it. You know, my computer crashed, and I had to rebuild everything from start. And I'm in the process of doing it. I wasn't even sure I could give this webinar because of that. And I still have a problem. But I'm going to put the Qs in. Normally I could put in any ticker symbol. Now let me see. I have the Qs in my instrument manager. No, I don't. Hang on one second. I just put it in, but did not stay. QQQ. Hang on. Got it. In. Okay. I should have it now. Here we go. There's our QQQ. All right, well, I'm not getting any data. Hang on a second. All right, I don't know why. Oh, it's loading. Hold on. Let's see if it comes in. Remember, I have a significant computer problem, and NinjaTrader can't fix it, and Sergio's on vacation, or the QQQ would come right up, and I don't want to push it too hard, because if I do, I might wind up crashing it again. But it works great on the stocks. I just want you to know, it really, really does. The Qs, the SPY. It gives you really, really great signals. And I don't know why I'm not getting the Qs up there. I really don't. My kinetic data feed gives me 500 tickers, and I don't know why it's not doing it. I mean, I'd like you to see it, because they're really great signals. It works on any future that you like. And it works on Forex. You know, Keith has his Forex market that he trades from 7:30 in the morning. He relies heavily on the Legere to take an entry. And in fact, what we're building, and you will get as a nice upgrade, is we're building a multi-time frame Legere. And we're in the process of doing that. And it's actually been built. We just haven't deployed it yet. What we're going to look at is multiple time frames to give this indicator even more power. So we're always looking to try to upgrade, and that's what you get. You get these free upgrades. You know, Mike, they do move quickly, but I tell you, on crude and the E-mini, I occasionally miss a crude trade, but it's easy to anticipate. And if you can anticipate the entry, you have time to get in. The market that I find moves really quickly that sometimes leaves me behind is the NQ, which is why I don't trade it. But the NQ is on a 4-unit Renko, is on a slower chart. So we don't have a lot of problems getting into the trades, I'll tell you. I mean, I rarely miss it. Occasionally I'll hit the entry button, but the market moves so fast, it doesn't execute, and it executes on the next candle. And I inherently get 2 ticks of slippage, but I just adjust. But listen, I don't have to read your question, but it's a very valid one, and that is the speed of the market. But I don't find that crude leaves me in the dust. I can keep up with it. The E-mini is just not fast. I'll be sending it out, Pat. Okay, Phil, in order for the Legere to run, how long before, say, the London session begins? No, you don't have to let it run, Phil. Just when you open your charts, it'll populate. It'll do its look back, and you'll get an accurate. You don't have to turn it on the day before. You're completely fine. Don't worry about that. And that's another good question. Market profile that we used to use was a little bit different. That took a while before it started tracing out an accurate stuff because it needed to accumulate data. This does not. It'll do it right off a price. It is. I agree, Mike. It is fast. Okay. All right. Well, Joe, we're going to get you one. Yes, Mike. We're using the same Legere settings. That's correct. I'm not sure. Okay. The Legere has a look back. Let me take a look. See, the problem with the Legere is Sergio buried almost all of the inputs. It does a long look back, and which is why it's so smooth. So I can't give you the exact number of days because honestly, it's doing a 256 bar look back here, maximum bars to look back. I don't know what the minimum is. And if he was here, I could get you the exact information. But when you open it in the morning, it's going to give you a very, very accurate derivation. Well, Cross, we are in the process of automating this whole system. We're going to go online with our auto trader, but then we developed this Legere, and now we're incorporating this into our automated system. We're going to use the Legere to censor any trades that don't trade in its direction, and any confirmed long entry or short entry, the auto system will take. So it's going to become an essential component of our auto trader. It's just a lot of work to integrate it now, but we're going to do it, and you're completely correct about that. It works on, Thomas, it works on NT7 or NT8. Heinz, again, you always ask me about Gary, but I mean, he's recuperating, and hopefully very shortly. It's spelled Lageurre. If I just like you said, Jay, if I spelled it wrong, I'm a bad speller, but it's correct. Lageurre is rest. Yes. Yes, it is. I mean, Ford is talking about how he gets great entries off of it. No, what you're going to have to do, Mike, if you have TOS, is it's a little bit of a pain, but if you want to use the signals, you can. And what you're going to have to do, and we'll do this for you, is we'll download a demo of NinjaTrader. And I actually have this set up on my computer. And then we're going to take your Thinkorswim data and connect it to whatever instrument you trade. So your data feed is going to be TOS, and it's going to power NinjaTrader. So you're going to have to take the signals off of NinjaTrader, which you're going to be able to work for free, since the demo is a forever deal with your TOS data feed. It works extremely well if you want to censor the trades. It's a little more cumbersome, but we have a lot of traders who use Thinkorswim, and there's a couple of other platforms, interactive brokers, that we've developed APIs where we can use their data feed. And it works on Ninja 7. This is Ninja 7, okay? And it also works on Ninja 8. What we're going to do, Brian, I'm sorry, is we're going to turn it into a multi-time frame tool. Right now, it just analyzes data from your trading chart. We're going to have it analyze data from multiple time frames. That's going to be the major upgrade. It's already done. Sergio left. I mean, he's entitled to take a vacation once in a while. I couldn't, chain him to the desk, but that's a major upgrade, major. And the multi-time frame tool is really a killer, because now you're using more than data from your trading chart. You're using a multi-time frame analysis, and it's almost powerful enough to trade without confirmation. And that's all done. We just have to tweak it and roll it out. Rick, I kind of went over the Thinkorswim. You're going to have to use your data feed to connect to Ninja, which we will do for you. We'll set the whole thing up for you. I mean, if that's an option that you'd entertain, it'll work. TradeStation, Carlos, is exactly this. Our TradeStation, we can't use it. I mean, we don't have a TradeStation version. I'm sorry. It's such a complicated system. If you look at all our indicators, that it's just hard for us to keep up with NT7 and NT8. We have a Sierra version that has not been updated, but we're just not on TradeStation yet. I'm sorry. Wish we were. I used TradeStation for years. Mikey, if yours holds the wicks, you're great. Mine does not hold the wicks. Okay? When I close and open, mine don't. No, absolutely no additional cost, Kay. When you get the indicator, you can configure it on 7 and move it to 8. We will do that for you at no charge. We're really tech support heavy, and that's not a problem. In fact, if you want, Sergio can configure it for you on 7 and 8, and you can use whichever version you like. So don't worry about that. Ernest, that's a great question. Now remember, these are all optimized Unorenco settings. We have one for every stock, and we have a setting for every future. This is not the same setting we use for the Dow, the NASDAQ, and the E-mini. It's the same setting we use for crude and gold. We'll give you these. It's a 5-2-10. That means you're going to get a reversal at 13 ticks. Every additional candle is 2 ticks in a trend. And this determines the size. So the 5-2-10 is without, I think, the optimized setting. You can get, if you want, you can get the reversal quicker. You can trade a 4 Unorenco, and I can show you really quickly. I'll show you the YM. I'm getting an error, and again, it's my platform. There's just something wrong with it. And I already have a support ticket in. I'm sorry. I don't know why it's not coming up. It should. I just thank God I've got crude and I've got the E-mini, because my whole platform is hanging by a thread. And it may be that I need a whole new computer because my Windows mainframe, this is a 5-year-old computer, is shot. So I can't even switch to the YM. But we use on the YM, we use a 10420. And what is very, very helpful is the 5210 is our base setting. The next setting would be a 15/6 to 30, and then a 28/40. You just go up in multiples of 5. 5 plus 5 plus 5 plus 5, 2 plus 2 plus 2 plus 2, 10 plus 10 plus 10 plus 10. And if you multiply this by 10 and get a 50, 20, 100, that's where you would consider trading Amazon and some of the really, really expensive stocks on a plus 10 setting. It's really easy, but that base setting is really a great setting. Well, Mike, you can always go back to 7. 7 is a little less complex, but I think it's a great tool. Like I said, Phil, just turn it on. You do not have to open it up early. Just when you open your platform, it will populate accurately. And I know exactly what you're saying, Phil. And there are some indicators that require that pre-opening to get an hour or two's worth of data, because we had one like that. This is not one that has to do that. Thank you much, Rick. Thank you, Robert. My daughter went to Boston University, Robert. She loved it. I think Boston College is a great college. The offer. Oh, is that what the slide said? It's good until Tuesday. I forgot to change it. That's all. Or I put the wrong date on it. It's 127. What? 129. I changed. I put that date in, and then I mistyped it. So see, it says Tuesday midnight. It's 129. Thank you for that. Well, Mike, I agree with you. TD. I trade all my options on Thinkorswim, and I love the platform. We're going to do it, Brett. I'm just waiting. I'm waiting for that to come through. Hey, Joe. I know, Joe. I'm gonna have Rory get on you. Yeah, it is, John. Thank you so much. Biz, it works on any time frame. Remember, it's time. If an indicator is not time frame or instrument independent, it's not real. So, you could trade a 10 unit Renko, you could trade a 20 unit Renko, you could trade a 2-minute, a 5-minute. It's going to work exactly the same. It does not make any difference. And the speed that I chose is just the speed that I trade crude. And actually, Dr. Keith uses it on a 5-minute. So he trades a 5-minute Legere. And he's using the exact same indicator I showed you. Because he really swears by it, but he trades a 5-minute. If it does, George, go for it. I don't think so. I truly don't. We built that Legere from scratch. The offer expires on Tuesday, and it's for 7 and or 8, either one, George. Yeah, he's on vacation until Thursday, Joe. When he gets back, you're on. The yellow line in the oscillator is for when, right here, the oscillator is neither locked to the upside nor locked to the downside. It's making its transition between the two. It's going from here overbought down to oversold. When you're in the yellow zone is when you look for the arrow, because the arrow is going to trade that cross above the 20 line to get you into a long trade here. And the market or the Legere won't lock long until the trade has matured on this trade. You see, you get no long entry here, no long entry here, no long entry here. You get 2 long entries here that you're not going to take. You're not going to take a counter trend signal. Now here's a short entry that just doesn't make it. And like, here's your great long entry. It's at the end, but you have to wait a couple of candles right here. Just on the few rules I gave you, trade it long when when price is above the 50 and the 15's above the 50, will get you really good trades. Okay, no problem. You can, Sean. You can. Fiona, I personally have not found the addition of Bollinger Bands to be helpful. And let me tell you why, Fiona. Listen, Keith has a different trading style, and I respect his trading style. Let me tell you why. Let me tell you why I don't like Bollinger Bands. Back in the day, when they were developed, they did work. And I'll show them to you. And I'll tell you, I've done a lot of looking at Bollinger Bands. And let me tell you why I don't recommend them. Now, Keith trades them great, but here's a great example right here. Institutional money determines the direction of the market. Now here, you get a hit, you're trading right off of the middle Bollinger Band. And you just ride the outer Bollinger Band up forever. Now, if you trade Bollinger Bands, you're going to look to get out on a touch of the long Bollinger Band. But this Bollinger Band never stops. And why does it never stop? Institutional money just is just not finished with racking this thing long. That's why I just don't find them helpful. I've looked at them quite a ways. Now, this short trade is tradable without the Bollinger Bands. It's a perfect trade short. Well, you don't get it till right here, even here. But you got a short signal. You got the Legere lock short right here. You're in here, and look what's at the Bollinger Band. You're just pushing the Bollinger Band down. Why? This is a proxy for institutional money. And as long as it's locked red, price is going to come down. As soon as it comes up, there's your exit on the arrow. But you'll notice the Bollinger Band didn't tell you anything. It just got raked down. Now, back in the day, it was a great signal, but not anymore. The same thing that knocked out Divergence, I think, has made Bollinger Bands untradeable. But that's just, listen, there's lots of right ways of doing things. Dr. Keith loves Bollinger Bands. I'm not knocking, his methodology. They are used. They are used. And in our higher time frame analysis, we have a lot of internal Fibonacci settings. Like if you trade range, which I did, I would always trade a multiple of Fibonacci. Like I would trade a 5 range, which is a fib, an 8 range, a 13 range, a 21 range, a 35 range. I don't think fib levels, again, anymore, just like the oscillator, they just don't work anymore because of institutional money. But Fibonacci has tremendous symmetry, and they do really help when you're looking at higher time frames on instruments that are not time-based. Like if you trade a 377 tick, what's the next highest time frame? It's a 610 tick. It's the next fib number. So in that regard, I think Fibonacci numbers are very, very helpful. Again, Jen, we don't have it for Thinkorswim. You're going to have to take it off of NinjaTrader and use your Thinkorswim data feed. The offer expires Tuesday night, Ernest. Again, Brian, multi-time frame analysis. Rory, if you call our number, Rory will pick up. He's at home, but he forwarded the phones, so you can talk to him. You know, I've got everything backed up on Carbonite. And listen, this isn't the first time it's happened to me. So if it does, it'll take me a few hours with Carbonite to get everything back. Hopefully I won't have to do it, but if I do have that problem, I'm not gonna commit suicide. But I can't tweak anything on here. I've had NinjaTrader open like this since Friday when this developed. Okay, you can't load. We will give you the Unorenko bars. Okay, I'm sorry, a lot of people have left here. Okay, I'm sorry. I would have given you the SPY and QQQ settings. Joe, you're cracking me up. Well, Ed, Ninja, like every platform, does have some problems, and I think a lot of them are solved in 8. I think it's better. If you're on 7, you can rotate to 8. Our whole platform is enabled on 8, but there are always going to be glitches in it. I mean, it's never going to be a perfect platform. Again, Carlos, I wish to God we had it active on TradeStation, but we can run it from TradeStation. Very shortly, Larry, it will be out. The multi-time frame. The only thing holding it up is Sergio. He's in California on vacation. Great. Send me the email. It's not, Rick. Yes, Mark. Okay, Carlos. What Mike using that holds the wicks? I don't know, Joseph. Honestly, I don't go in. I know Big Mike. I just don't go. I don't really go into that website much. Thank you, George. Listen, Mike. Yeah, I agree with you. I think that's why they went to 8. I know they're working to make it as good as possible. 428 for the E-mini. Mo, it's still the same. The room will be open on Tuesday. Now, normally it's open every single day, Paul. Tuesday, on Monday, I have to go to traffic court at 10:15 in the morning. So tomorrow, it is not going to be open. It's really, I hate it, but I got pulled over by a cop and I have to go to court. I'm going to get found innocent, and I'll be out of there in 5 minutes. But we opened the room at 9:15. I mean, it's actually open early in the morning, but I don't start until about 25 after. But because of that freaking traffic court thing, I won't be there tomorrow, but I'm there every day. Great, George. God bless you, Phil. Thank you much. In the live room, Ernest, E-mini and crude. A lot of people in the room also trade the NASDAQ and the Dow. And Gary, who's going to be starting at some point in the future, he will be starting to trade at 3 a.m. in the morning, trades exclusively crude, and he trades the 6E. Very shortly, the NT7, NT8 full versions will be going out, David, as soon as Sergio gets back. Right, it's a fractal energy line, George, you got it. No, the multi-time frame is K, the auto is not. That's an enormous, I mean, we're working on that for months. But the multi-time frame is included, yes. We will send out the recording. Again, Ernest, E-mini and crude. Yes, that was really funny. Again, the yellow line is when you don't have the Legere lock long or lock short. Listen, trading it is going to take a little bit of screen time, but everybody gets a month in the room, and I rely heavily on it. I need the confirmation. I watch the entry arrows. I watch that lock long, lock short, lock long. And with a little bit of screen time, it'll become very, very easy for you to trade. So listen, everyone, thank you so much for giving me your time on a Sunday night. I like these Sunday night webinars because, you know, I just kind of go food shopping and don't do much on the weekends right now. So I think they were, you know, a nice convenient time. They don't obstruct your day during the week. And I know everyone's really busy. So we'll send out a recording. Everybody have a wonderful, wonderful night. And listen, I wish that all of you make money. We're all the small traders, and we're up against the other small traders. Institutional traders, we will never beat. The only thing that we can do, thank you for it, I appreciate that. The only thing that we can do with the institutional traders is be in their direction, because we can't counter trend trade them, which is what the vast majority of small guys like us do, and they just get burnt to a crisp. We're looking to trade with big money, and we're looking to take all the counter trend traders' money. This up candle, we want is money. We want their money. These 4 ups, we want their money on the down. These 3 ups, we want their money on the down. That's all we want. We want to overrun everybody caught. They're not caught. They do this on purpose. And we want to run them over. It's the only way we're going to make money, and we do it regularly. So, no, Brian, you'll get the multi-time frame, but not the auto. I mean, I want to make it really clear. The auto is a completely different system. If we make any improvements to this indicator, that's our company mandate. You will get that upgrade, and you'll get that multi-time frame assessment. And I'm telling you, it is completed. And we would have it out and ready to go. I don't know, I might be presenting it tonight if Sergio didn't run away to California. Sao Paulo. Hi, Russ. Thank you so much, Russ. So you're in Sao Paulo. Obrigado, Russ. Muy bom. Muy bom. So listen, everyone, have a nice evening. And again, best of luck to you all. And if you have any questions, just give me a call. Take care. Have a wonderful, wonderful evening. Bye-bye.